The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 33, NASDAQ up 32, S&P's up 11, gold flat, $15.74 an ounce. You got silver down 2 cents, $18.37. Light sweet crude off 63 cents, $62.08 a barrel. Notes and bonds. You get the 10-year up 3 ticks, 129.08. 30-year up 7 at 157.20, and King Dollar. King Dollar up 89 ticks, 97.093. Euro is at 111. Yen is at 108.5, and the pound is at 131 to 1 US dollar. We got an announcement out here today, folks. We're going to be open 24 hours a day right now. Our man, Mr. Kevin Hinks, is going to be on all night long, making sure that he can keep us straight when we're talking about defined risk, because the bottom line, if you want to see a move inside the S&Ps, how about that move, Tom, inside the S&Ps, right?
Oh, boy, 2% down, up, and now we're in positive territory.
I'll
Nothing
tell
like
you,
it.
folks, it's about as good as you get. I mean, bottom line, we get on 31.81. You're at 32.47. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time, Kevin Hinks and his team, outstanding program. If you want to understand the options market, option strategies, defined risk, you better get your head wrapped around defined risk. I can tell you something, folks, okay? Whether these, like last night, you can say the surprise was downside and the surprise was upside, okay? Both sides. So defined risk is absolutely where it's at. Kevin Hinks, I volunteered you for all night long. What do you think?
I'll tell you what, just as a precaution, Tom and Tommy, I took 3 5-hour energies just to get me through all this. So I'm feeling a little lightheaded, actually, from that. I'm not sure I was supposed to take that many.
Seriously.
But that's what you do in these markets because, seatbelts fastened for these rides because last night, that was pretty amazing because the original headlines came out. Some of it was a little hyperbole, and then we started to realize, pretty early in the night that this was kind of a myth.
Right.
It wasn't near the damage that anyone thought it would be, and now all the talk is of de-escalation.
Yes.
So even though the roller coaster was in full swing early last night, this morning it's fairly muted, and you're seeing that in the risk-off trades here.
Yeah, there's no doubt, man. I mean, we've talked about how much this market is shooken off. That last night, that was something else, Ben. There's no two ways about that. There's no two ways.
Yeah, it was pretty incredible. And when I look at this, is just another reason for your viewers, for the viewers of TD Ameritrade, for the viewers of our shows on the network, why people should be at least looking at futures markets and understanding futures and expanding their footprint from stocks into futures, because a lot of this move by 4:30 Chicago time as I'm coming into the city, futures were up. They were all the way back and up. So that move was all overnight in futures.
Right, and that's happened a lot. One of the tigresses in the den yesterday in the trading room, at 4 o'clock, she had said, okay, now the market can move. But that's a fact, folks. That is what's been going on quite a bit. There's no doubt.
And there's a lot of stories about that, where the major move in the market is made overnight.
Yeah.
In these things. So, if you're hedging a portfolio, if you hedge it with futures, you could have bought futures overnight and had a nice little trade, taking off the hedge that you put on.
Yes, no doubt. And, I know you get, on the program yesterday, you're talking about the home builders. Lennar came in. I mean, Lennar came in big here.
Yeah. That's what we're doing. We're taking 1 or 2 names that we see in the news, and we're making those theme shows. Like today. Today we're doing consumer staples today, consumer discretionary tomorrow.
Nice.
So today we're doing Procter & Gamble, Colgate-Palmolive, and Clorox. And we're just going to, and these are some of my favorite shows. They don't sound very sexy, but when you realize how many products of these firms that you use, it really starts to change
Yes.
At the start of the show. You name me, I guarantee you, and we guarantee nothing in this business, that you use at least 5 to 7 of their products every day.
Yeah, it's, you know, it is amazing, Kevin. I get the numbers and the segments up here. So picture this, folks. Fabric and home care, this is Procter & Gamble now, does $22 billion. Baby, feminine, and family care does 17.8. Beauty does 12.9. Healthcare 8.2, and grooming 6.2. Now those are all billions, folks. Okay.
And with a B.
Yeah, yeah.
They have, how about this stat, Tom? They have 23 brands that do between $1 and $10 billion in revenue. They have 14 brands that do between $500 million and $1 billion.
That's amazing, man.
Massive, massive numbers with, you know, a 2.5 dividend yield. And so, I mean, these are stocks that the normal everyday consumer should be looking at, especially when the 10-year yield is at 1.8.
Well, and even at these, you know, Procter & Gamble, folks, is almost at its high, but it's still paying a 2.4% dividend.
Yep.
You know?
Exactly.
You know what?
So these are ones that we all should be looking at.
Yeah.
And, you know, because why? Because when you think about consumer staples, these are the products that everyone uses on a daily basis. Bounty, Charmin, Vicks, Crest, Pampers, Pringles, Tide and Cheer, right? Jif peanut butter. I mean, everything that you use on a daily basis is in their portfolio.
Pretty amazing. So, I mean, more than likely, we use 5 of them before we even get out of the house in the morning.
Exactly. I can look at this list. I've used 3 of them already today.
I know, man. I know. Yeah, well, you know what's wild about, and you haven't heard this for a long time in the press, folks. I remember, like, this is going back 20 years, but if you got a job at Procter & Gamble, their training program is phenomenal, too. I mean, I happen to know a couple guys that got out of that, a couple of my cousins, actually. They did so well. I mean, they worked for them for a while, but they did so well. They just, it's like going to Harvard or MIT or something, coming out of their training program.
The training programs at some of these companies are just the absolute best. They're better than any grad school you could go to. Yeah,
there's no doubt. So, you know, we get a market that shakes everything off. The president's going to speak at 11 o'clock. You know, we'll see, you know, where that goes. Market-wise, it's going to get intriguing here, man, because, you know, the VIX, you know, of course, the VIX is, you know, only going to move when the markets are open. But it's kind of intriguing that we know that the volatility is much higher than what the VIX is generating right now. Because if the VIX was ever open last night, it would have been, like, right to the moon, right?
Yeah, and that's a good call, right? The VIX, though it may adjust its price slightly overnight, you're not getting a trade in any of the VIX other than the futures that you can do overnight. So, yeah, I mean, the VIX, should it be where it is right now, you know, boy, it's tricky. But if this is the nothing burger that it appears to be right now, and I don't want to say it's a complete nothing burger because, frankly, we may not be out of it, right? I mean, President Trump's going to speak right as we go on the air for Fast Market. That's probably going to move the market one way or another, as he's known to do. So, you know, it's just going to be more information to consume and digest.
Right here, folks, 45 minutes from now, you get a double banger out here today, okay? You get Kevin and his team starting the program. You get President Trump speaking. We're talking define risk. Kevin, you have a great one, safe one. We look forward to the program 45 minutes from now.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow is up 49, Nasdaq's up 30, S&P's are up 11.5. And Tom O'Brien, we are going to have oil, and I'm going to just put this chart up first. If you want to see a ride in oil last night, folks, okay, this is pretty amazing. This contract here, we're trading the February contract, gets up to 65.65, and we're at 61.98 right now.
Yeah. When I was, excuse me, doing the 9 a.m. update, said almost $4, man, $4 from high to low on that oil contract, just from the peak to the low. I mean, everything, of course, moving last night. We talked about the S&Ps almost had 2% from low to high.
Yes.
Gold contract, right? We haven't talked about quite yet. What was the high on gold?
16.13. Yep.
So you're talking about $35 about on gold, as in the high to low. And oil, of course, we get the inventory numbers. I see you have the screen up there right now.
Yeah, the whisper number up here. We got the whisper number is, so let's see, the whisper number is drawdown of 5.9 million. The survey number is 3.2.
Okay. So they're looking for a drawdown regardless of where they are, right? Survey number, a little bit less so than the whisper number that Bloomberg users are looking for. The contract, we got it up here. We're at about 61.75. We're trading February crude oil. Like you mentioned, we made it all the way up to about 65, 62, almost $66 last night. So there's the contract. I jumped ahead. Here are the 11 a.m. spreads available. Now we're trading right now 61.74. Cool thing about these is the 11 a.m.s line up with exposure right from 61.75, so we're within about a few pennies, which is always nice. So you're not paying a lot of intrinsic value. You're just paying premium in terms of time and defined risk. Here's your bullish spread going from basically right where we're at, up $1.50 to 63.25. There's your bullish spread. You're risking about $27. You're getting in at 62.03. You would be risking down to 61.75. So as this is ticking up a bit, that's ticking up a little bit as well. And then on the bearish side, pretty similar. The only difference being that you have about 5 pennies now of intrinsic value on the bullish side. So you're looking at about 48 as this is recalibrating. 48, 49, call it $50 with commission. So you're looking at about 50 cents of movement you would need in either direction before you begin to break even. The thing to keep in mind, especially on a day like today, is that if you're only exiting one of these contracts, right, you're risking 50 cents for both sides of it.
Yes.
But you're capped at $1.50 of profit potential. And it's just important to keep in mind when you're putting up 50 cents, basically $50, which represents 50 cents in movement in the contract, right?
Sure.
Because man, oh man, you know, you're risking 1 to make 3 if you get maximum movement. If you get $1.50 by 11 a.m. Now, on a day like today, you could, you know, because Trump is speaking at 11 a.m. Now, here's what I would say is that, so there's the 11. I would maybe want to go out till noon, especially with President Trump speaking at 11 o'clock. The thing being is that noon you have $62. So you'd be about 20 cents in the negative, unfortunately, as in not quite the same, but this is ticking up as we continue to speak. Maybe this will get up to $62 by the time 10:30 rolls around, because there's your bullish spread. You're going to be out of the money on the bullish side now by about 15 cents, but this has just moved 10 pennies since we've been talking. And then on the flip side, there's your bearish spread, which you now have a little bit of intrinsic value. And so you're looking at $62. Now, number one, you're paying for the time. The market knows that, number one, that's a lot of time on a day like today with everything going on with President Trump speaking at 11 a.m. There's going to be some premium priced into that as well. But it's also 18 cents away from the strike price. So you're paying all that intrinsic value on the bearish side, along with the premium that you're paying of about $24 on each side.
Yeah, and in a huge way. I mean,
what I would say, though, the last thing is that, man, oh, man, on a day like today, if you're ever going bearish the price of oil just in general, I like the bearish side trade where you're getting in at 61.60, the contract's trading at 61.77, and you're capped at losses at 62 on a day like today where you just almost traded up to 66.
Yeah.
That's not a bad trade to pay a little bit of premium, cap your losses to the upside when who knows what is about to be said by the president and who knows what's about to happen before noon.
Oh, yeah.
And you're not paying a lot of, you're paying, there is a bid offer spread today, and that's representing some of the premium more so than usual. But you're getting in 18 cents below the market with some decent loss defined risk, right?
Yeah, there's no doubt. And the thing that's amazing, when you look at if you look at the oil contract, folks, as well as the gold contract, that move was the full move of the margin. So one contract in oil is $4,125. And we moved $4. That's $4,000. Okay.
For $4 in both directions, man. They could have wiped out the Bears on the run up, and then they could have wiped out the Bulls if you bought at the peak.
And that's going to be the same with the almost the same with the gold. 4,900 is one contract, and bottom line is that we're $33 off the high. You can say the other side of it, both sides, $33 either way. So
yeah,
there was some shuffling around here last night, folks, because what does happen inside the futures market, well, in general, these platforms are set up that if, in fact, there's not enough money in those accounts, they'll close those positions out ASAP. You know what I mean? Automatically. It's just they have to have it done automatically. So none of us know where that stands, but it's pretty intriguing, man. Do you know what I mean? Because it's like, is it a flat market out here? Meaning that, did bulls and bears flatten out so everything's going to start over again? Not everything, but you get the gist of it. That a lot of positions got taken out on both sides of the marketplace.
It was pretty dicey, man. I just happened to I was making some dinner. I turned on the nightly news, right? You're talking about, I think I just actually turned on the TV, and ABC was on. It was like 6:45. And the reports were breaking. And that was not CNN, you know what I mean? That was just one of the main networks.
Yep.
And that was a little startling to say, oh boy, is this network coverage that's breaking in of Iran firing on a base with U.S. troops? So to find ourselves in positive territory. And then what we haven't even touched on, right? That Boeing had a plane go down in Iran on its way to Ukraine. Doesn't seem to be involved in anything going on, but my goodness, I don't want to call it a coincidence.
It's an older 737, but it's still bad news for Boeing, for sure.
It is bad news for Boeing, and just remarkable that on the geopolitical news that we have last night going on, that you get that report, and you get it in Iran, bound for Ukraine.
That's what's crazy, right?
It is crazy.
What are the odds of that, right?
I agree. That just you know, and it looks to be that, you know, not related at all. But boy, oh boy, when that came out and I saw that headline, for a brief moment, I said, oh boy, what is happening here? And hopefully that's not the case, and unfortunate either way, for sure.
And if we take a look at Boeing, folks, what you're going to see, these, you know, these lows want to get tested again. So, you know, we'll see how this shakes out. But the bottom of this consolidation is like 320. You're at 331 right now. Volume's not bad out here today in Boeing, though. I mean, it's only down $6. It's not like they're, you know, popping it with volume. So we'll see how it shakes out. But it's no doubt. I wouldn't want to be the CEO waking up in the morning. You just get the job, and all of a sudden you get another crash. Even if it is hey, listen, crash to crash.
No matter what, you're right. No matter what, it's a loss of life. It's their company. They're dealing with it. It just does not stop for that company right now.
Stay right there, folks. Tommy and I are going to be coming back with these oil numbers. We have the Dow Industrials right now up 22, Nasdaq's up 21, S&P's up 8.5. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials up 16, Nasdaq up 21, S&P's up 8. Let's see what we got with I can actually go live. Let's see.
We must have top live, I believe. We must have plenty of oil because the price just dropped about 50 cents to 61.25 as we pull it up.
That's a beautiful thing. Top live. Here we go. Let's see what we got.
Oh, boy.
Oil inventories rose
Yep.
rose 1.6 million barrels.
That's right, man.
Gasoline inventories rose 9.1 million barrels. Wow.
So to recap, what was it? Between about 3 and 6 million barrel draw the market had been looking for?
Yeah. WH.
It's not going to have it up there anymore, unfortunately, I think, once it goes off.
Oh, does it?
Yeah.
Yeah, so let's see. Where is it? Well, anyway.
Yeah, it jumps right off the screen, unfortunately, I think.
Oh, I see. Well, I got to find out. I went, see what place we came in. Because I didn't go for a draw, but I went for a draw, but like 1 point something million.
Okay.
Versus what was out there, so.
Well, you would have been on the right side. You were looking for much less of a draw than the market was looking for. But the contract right now, I have it up there on the Nadex platform. And yeah, that one bar, we opened it. It was as high as 61.89. You got February crude right now trading at 61.27. And so you got about 50 cents movement. You know, we were looking
look at that move, man. I see it. Yeah, I can see a chart right now.
Yeah, I mean, it looks small because we were just up at 66, man.
Yeah.
But on any other given day, this would be a mammoth drop of about 50, 60 cents in a heartbeat.
$4.50. Unbelievable.
Yeah.
So let's go take a look at some of the higher volume equities and see what we have out here. You got, let's see what we got here. I'll put this in the S&P instead of the NASDAQ. Oh, yeah, no, hey, let's talk about this for a second, too. So the NASDAQ, folks, just tested its high. And this is really important. My take it's important anyway. We'll see whether it can hold. Because the NASDAQ was proven to be the strongest index out there. And we did it during the break. So we hit 9104, 9093 was the number. That was from last week. Actually, not last week. Yeah, last week. And NDX also did it. Now, the NASDAQ futures didn't do it. But, you know, we'll see how that shakes out. Because you had the NDX 100. You know, the real question in my head is that, okay, is it going to be a confirmed ABC structure on the way up, or is it just going to come back up and test the highs? You know, and we'll find that out. It'll take at least halfway through the day to see where you get the volume, because we're going into 31 million shares, and we've done 5.3. That high out there that was generated on the was 216.16, and we hit 216.36. So.
Pretty remarkable. All-time high in the NASDAQ on a day like today with all the news stories breaking.
Deviant, man. Deviant markets. Let's go take a look at some of the higher volume equities out here and see what we have. And okay, so look, the advanced micro, man, that thing moved yesterday. So that's down 70 cents. No big deal there. Walgreens. Oh, look at this thing. What's happening here? Let's pull this up. Walgreens Boots is almost down 9%. What happened here?
Are they not going to go private anymore?
Oh, that threw out some numbers. Look at that. That's a gap down. Down $4.15, $55.15. This might be. Yeah,
missed projections. Did they just come out?
Yeah, I think so. Let's see. Earnings miss. Profits fall 25%. Walgreens sales and earnings for the latest quarter fell short of what Wall Street was guiding, but the drugstore chain reiterated its earnings outlook for the year. Sales at Walgreens rose less than 2% in the quarter, ended November 30th, hitting $34.3 billion. Analysts had been projecting 34.58. Sales fell, shares fell 4.6%. Quarterly profit was $845 million, a drop of 25%. That's a big number, man.
Yeah.
Yeah, huge number. Now, the other side of that, we were talking to Kevin Hinks, and we were talking about the home builders. Lennar came out with some big numbers here. Lennar is a home builder. They're in like the middle. They construct single-family attached as well as sell residential numbers. So they're about in the middle of the market, meaning that you're talking 300,000. Well, here it is. I hit 410,000 is the average.
Okay.
The company delivered 445,000 homes in 2018. This number, though, there's a couple numbers here that are pretty cool. Let me see. Is that right there? Yeah, so revenue, $6.97 billion. That's up 7.89%. Estimate was 6.61.
That's quite a
New
beat on
orders,
revenue.
23%. They were expecting 16%. That's a big number there, man.
Yeah, I mean, that's, you're only supposed to have revenue of 6.6 billion. You come in at almost 7 billion. That's 400 million in revenue that they just beat. And percentage-wise, that's an 8% beat on the revenue almost.
Yeah, no, it's a big number.
Yeah.
Man. It's definitely a big number. And this backlog's a big number too. Any backlogs are a big deal, folks. One of the main reasons the backlogs are a big deal is that, so the backlog, the estimate was 15,230. They get 15,577. What happens with a backlog is this, is that, let's say that, you know, you're going to buy the house. Okay, you go to buy the house. These are all new houses. You go in, you sign the contract. Lennar actually has a banking structure behind it also. You get the loan. Lennar knows that, okay, bottom line is that you are lined up. I'm lined up 7 or 8 months from now. Do you know what I mean? That I'm going to have a house. So the backlog number is always a cool number because, you know, when that starts going down, and it goes down dramatically once, you know, the housing crisis hits.
I would bet,
Yeah, it's you know, it's nothing like, imagine, you know, you have a business and you know that, okay, I'm good until whether it's 8 months, 9 months, 10 months out. That's pretty cool. There's no doubt about that.
And how about D.H. Horton, I believe, came out with theirs. DHC, maybe? Are they?
DHI, I think. That's it.
DHI, yes.
Yeah, so let's see what they have.
Because they popped as well.
Oh, yeah. Okay, so these interest rates, if they stay low, that's the number, man. So D.H. Horton, let's see. So they, single-family homes, entry-level and markup, and move-up markets. Okay, so they're at an entry-level.
They got 300,000. I see on that as their
That's
average.
cool. Yes, I saw that. That's awesome. Yeah, so that's pretty cool. Understanding that, right?
Yes. You know where they are in the market, where they fit.
Yes, and that also caught the bid. So let's see what they have to say. Yeah.
Maybe they didn't.
Oh, that's interesting.
No, they.
Yeah, let me.
No, maybe they're just getting a pop on
that. Yeah.
Yeah, I just happened to jump to the.
Yeah, January 27th. Yeah. So that's coming out with the numbers, but
and it would make sense, right?
Totally.
I mean, 300,000 to 400,000, not a wildly different market. If you have Lennar coming out and crushing it, taking in 7 billion in revenue versus 6.6. The expectation would be that D.H. Horton better be doing well, or they'll get smacked down when they come out.
Yes, and listen, man, going from 400 to 300, D.H. Horton should do a lot better. 300, that's a soft spot. That's a nice spot.
It's a good spot. It is.
Stay right there, folks. Tommy and I are coming right back. Dow's up 10, Nasdaq's up 18, S&Ps are up 8. We'll come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrials, where is she? Yeah, there we go. Dow Industrials right now are trading, sorry about this, folks, up 13, NASDAQ up 16, S&P's up 7.5. Let's go over to our man, Mr. Teddy Cakestad, as we do each and every Wednesday at 40 past the hour. You can reach Teddy every trading day, folks, at forex-trading-unlock.com. That's forex-trading-unlock.com. Teddy Cakestad, what's going on?
Well, we got some nice moves shaping up in the currencies to start the first full trading week of the year off, I think.
That's for sure, huh? How about last night? Holy cow. I mean...
Right. Well, the Middle Eastern thing is fueling it, right?
Yes. No doubt. No doubt. So where do we want to start, Teddy?
I think you want to start with the euro and the pound.
Okay.
We have the Brexit deadline that's coming up on January 31st. And the pound, I think, is going to be a scary trade. I think it's going to be a range trader's delight and a swing trader's nightmare as we head into January 31st. I think it's going to be a very tight winding trade, and it doesn't matter what's going on in the Middle East. But the euro-US dollar hit some key support. We had a big sell signal in the euro-US dollar last week, and we just touched the top of our target range. There might be a little bit more to go. I think that because of the Brexit issue, the euro is going to start to get really tight, and also with high oil prices, it's going to be really hard to break the euro as well.
Yeah, interesting, man. And then, I mean, the yen last night went ballistic, right?
Yeah, absolutely.
What happened, folks, is that all the, not all the indices, but gold, oil, yen, it totally makes sense. The yen, bottom line got down to 107, 107.65, and then just shook it off too. Mm-hmm. Yeah, so.
Yeah, now it's $2 higher.
Yes.
Or a full dollar higher.
Yeah, it's pretty intense, man. There's no doubt about it.
Absolutely.
Yeah.
Absolutely. Well, we've been talking about how, with the dollar index, when it was under pressure, the U.S. dollar yen would still rally. And now you have the dollar index finding some support, so it kind of gives lift again to this market. It's hard to break it down. It
is. I mean, so when you look at this index, folks, so, the number I'm keeping my eye on is 97,141 here, 97,147. So you're jumping back in the higher range again,
Mm-hmm.
And we'll see whether it can hold. I mean, I expect the broad market today, as well as these currencies, to have more volatility than normal. I mean, because most times what I've seen is that when you get a night like last night, people think it's calm and cool, and it is at this particular point, but my take is that we're not going to stay calm and cool because it's this is a nervous market, man.
Right. Well, you know what's interesting is that the U.S. dollar is getting a big lift against like the Japanese yen right now, and also against the Canadian dollar. And the Swiss is actually, it's trying to. I think it's pretty much unchanged on the day right now.
Okay.
Yeah, it's pretty much unchanged. So, but those are the ones where you're seeing the most movement, and that's why I think that it's amazing how, with this turmoil in the Middle East, how the market can really shrug this off and pretty much absorb it, because it seems like the pound and the EU and the euro rather are more concerned about their Brexit deadline than they are about the Middle East.
Yeah, that's interesting, man. And I guess, you know, you explained it to us last week. I mean, this has been quite a move in the Swiss franc, right? I mean,
yes.
You know, it's what, we're 97.02. And it's like that's the lower end of this range, right? I mean,
absolutely.
Yeah.
And that kind of goes with, remember how we're looking for a little upside correction in the dollar? This was before this whole thing launched in the Middle East.
Right.
We were looking for a dollar rally. So they kind of fundamentally and technically line up. And then we had all those signals that were triggered last week, remember, for corrective moves in the euro and all these other things. So yeah, to see the dollar index get up to that 97.5 area, even 98 even, that's very likely, I think, over the next week or two.
Man, there's a lot of moving parts in this marketplace, man. I mean, yeah, there's no doubt. And
then get ready for the next drop.
Yeah, I think
long term for sure.
What I've found more than anything is that I'm looking for at least a test even last night. When you get spikes like that, the bottom line, they love to go visit their friends, man.
Right.
It's just a matter of when they do it. You know, and I remember even, you know, folks thought when that flash crash came in, I don't know, about 10 years ago, they thought it'd never get revisited. It got revisited. It's when those things happen, they just like to get revisited.
Right.
It is what it is. I don't know if it's a technical, fundamental issue, but they like hanging out, no doubt. You know,
there's some interesting moves in the some of the more exotics, like the pound euro trade and the Swiss euro. The Swiss is actually a very strong currency right now. So I think even if the U.S. dollar Swiss gets this nice little bounce, which we're kind of talking about right now, I think overall the U.S. dollar is going to take a dive against the Swiss over the next like 5 to 6 months.
Yeah. No, listen, you know, we'll see where this shakes out. I mean, my take is that we broke that longer term trend in the dollar, and that's a 18-month trend, so that's quite a trend. And what does happen, folks, every time that you try to test this higher area, which the dollar is doing out here today, if it makes it, it makes it. But if it doesn't make it, that's another indication. You know, you test, you test, you test. We've already tested it twice. It's failed twice. We'll see, you know, what ends up happening here. And, you know, it just lines up the supply versus the demand, right? I mean, yeah. So
that's where the really basic fundamentals come in line there.
Yes. No doubt. And I guess, you know, in our case, I mean, you know, if we went back, you know, 10 years, Teddy, I mean, everyone was worried about the deficit. Now, and I don't think I can find a conservative fiscal in our government. Right? I mean, you know, the bottom line, folks, is that, you know, on the internet, if you can rewind some of these things, and you can, folks, okay? I mean, 10 years ago, you know, everyone's worried about, we have too much debt. Well, the printing presses have never stopped, and they've exploded higher. You know? And sometimes when even, you know, I hear even other analysts say that, well, this can't go on forever. Sometimes I think, well, why can't it?
Well, you know what? You actually said something that's really interesting there, Tommy. You're the big equity guy, and think about this. Remember, like when there was the crash of '29, there was only the Dow.
Right.
Okay. In 1987, there was the S&P 500.
Right.
Now you have these multiple indexes, multiple industries. We have the aerospace industry alone that could dwarf everything in history as far as the stock market's concerned. So every other business could collapse. We could have a total like depression going on, and the stock market might elevate to levels we've never ever even thought of.
That's interesting. Yeah. No, listen.
You know.
No, for sure. There's no doubt, and that's where. You know, if inflation is creeping in, that's where you absolutely can have higher numbers, even though folks, you know, bottom line aren't making what they made. If I learned anything when that whole Zimbabwe deal happened, I remember us watching that Zimbabwe stock market, folks. Before their currency collapsed, the stock market went to the moon. And then, of course, when it collapsed, it went even higher. But that was a lesson, I think, for anyone, right? You know, a number is basically arbitrary. You know, it's what that number can buy you, right? More than anything.
Right.
You know?
Otherwise, you have, you know, the depression like you had in Germany in between World War I and World War II.
Yeah, pretty intense, man. Well, listen, folks,
So.
you know, our man Teddy, if you've missed Teddy did a couple of Dave's shows last week. They were fabulous shows, Teddy. We really appreciate it, man.
Thanks a lot. Those were fun.
Okay, man. You have a great one, safe one. Of course, we look forward to speaking to you next Wednesday.
Take care.
Thank you, man. Stay right there, folks. Tommy and I are coming right back. We have the Dow right now. Let's see. Dow's up 6. NASDAQ's flat. S&P's up 4.5. We're coming right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tom and Tommy O'Brien, we do appreciate you growling and prowling with us. You know, this Boeing deal, I mean, it seems that, I got this up here, that they don't quite, there's a couple different things coming out in the Boeing deal, even from Iran, sources as to, you know, what you have happening here, okay? Investigations into the deadly crash of Boeing will be hampered, of course, from the escalating tensions. But let's see, the crash came a couple hours after the missile attacks. The Iran's Disaster Mitigation and Management Organization said early indicated the cause was a technical issue, while the Transportation Ministry suggested it was an engine fire. This is going to be kind of weird, right? I mean...
Yeah, and I was hearing some people talk about it this morning just on the news stations saying that usually what happens in a situation like this is that wherever a crash takes place, that country's, departments, their version of the FAA will take the lead, but many other countries like, our FAA will come in and assist. And in this case, that is going to be very difficult with what's going on. For any of our entities or just any international entities in general being in Iran as, tensions are ratcheting up and you don't want to put people at risk sending them to Iran to investigate something like that. So it may be a while before we actually have any type of certainty as to what really went on there.
Yeah, no doubt. And it's not going to be a while till we realize what Trump's going to say. So it's a 10:56 out here. 11 o'clock is the number. We'll see where that shakes out. The last thing we heard from him is that everything's fine, right?
All is well, so they say.
All is well. Stay right there, folks. We got Think or Swim coming up next. And I'm Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Go get him, folks. Wow.